Pelletier, the Senior Portfolio Manager at Wellington Altus Private Counsel. Martin, thanks a lot for joining us. You are concerned about liquidity in 2025. Why don't we start there? And you make the point that it was a major tailwind in 2024.
Yeah, so let's take a look back at the last 12 months here. You had the Fed cutting rates, but yet longer-term yields holding steady. You had a World War III scenario with deficit spending in the U.S. At the same time, you had a large amount of liquidity, something that I really didn't fully understand or capture in my analysis at the beginning of the year by the reduction in the reverse repo account of the Fed. And so as a result, U.S. money supply expanded by almost 4% over the last 12 months. And that's the biggest year-over-year increase since August of 2022. And at the same time, you have Elon Musk and Trump pumping up crypto. And so you put all of that together, and it created a lot of speculation in the market and a lot of growth and multiple expansion. And I just wonder, now that reverse repo account's been drained, what's left? Is the U.S. Treasury general account, where there's $700 billion in there, is that going to be used next? I don't know, but we're going to need to see some more liquidity to substantiate these really high multiples that we're seeing in the market.
Tell us more about the reverse repo account. I think when most individual investors think about the Fed and liquidity, they think about interest rate increases or cuts and quantitative easing or quantitative tightening. Where does the reverse repo account fit in here?
Excellent question. So the Fed has many different tools that it can use to provide liquidity into the market. Some of it intentional, some of it not. And so what's happened is over the last 12 months, the Secretary, the Treasurer Yellen has issued more bills rather than long-dated treasuries. And so instead of institutions parking their money overnight in reverse repo with the Fed, and backs up by the U.S. government, they can instead use that money to buy those bills that Yellen has been issuing, or indeed taking money outside, like I placed the park money with the Fed as a money market instrument overnight, instead using that money and taking it out to put it into the market and drive the market higher. So just think of it as a place to keep some cash. And there was a lot of cash kept in there, and now that's been drained and put into the market and supporting the U.S. deficit. Now that's been done, the big question is how is the U.S. going to finance its deficit going forward? And number two is, where are these institutions going to get more cash from to place into the market?
So you see a challenging year ahead in equities in 2025, particularly for those mega cap tech stocks that have led the market higher for a good couple of years now. Yeah,
if you take a look at those stocks in particular, you take Apple, great company, there's no doubt about it. And but it's coming up to a $4 trillion market cap, and it's trading at 40 times earnings and 10 times revenue. It's highest in its entire history. Even higher than when it was putting out some pretty exciting products with iPhone launches and innovative products at that time. What lies ahead to substantiate these multiples. So when we're looking at buying, we take a look at owning a stock over a 10-year period. And if you're going to buy something, you buy it, you get some of the free cash flows over the 10 years, and then the value on Judgment Day, which you value what the multiple is going to look like in 10 years. Now, is the multiple in 10 years from now, ask yourself, going to be 40 times earnings and 10 times revenue? And if it isn't, then there could be some large losses looking ahead. And so it's priced for perfection. It's priced for continuing liquidity in the market by the Fed. And if that doesn't happen and the Fed has run out of tools, what's going to drive those multiples even higher?
You say in some recent commentary that you worry investors have been turned into speculators. And as an example, you point to a couple of filings for new exchange-traded funds. Talk to us about that. Can you hear me, Martin? Okay, we have lost our...
It looks like we're having a little bit of a bad feed here.
We are. We're going to take a break and come back.